Welcome back to the channel. My name is Brad, and today we're going to cover Roundhill predictions for next week. We're going to see how I did against this week's distributions. We're going to talk about some Yieldmax news, and we're going to look at NEOS, and I'm going to address a comment that I received from one of my past videos about covered calls. If that's what you're interested in, stick around. So my name is Brad, and I've been doing these for quite some time. I even got a comment this morning that I stopped doing them, and I was like, I do a Roundhill video every single week. Let's get right into it. So I said, for this week on Friday, you're going to get paid 21.4, 17.3, 24.4. Well, okay, it's 21, 17, and 24.9. Close enough for where we are, share count and everything else. Now, somebody keeps on asking week after week, why BTC? Well, call up Roundhill and tell them to put all the information that I need on their website to be able to do the calculations, so I don't have to spend hours trying to figure it out, and maybe I will, but until Roundhill publishes the data that I need to be able to do the predictions like I do these, I can't do it. Sorry, it is not my issue. It is Roundhill, and I don't work for them. So come on, cut me a break. I can only do what's available from public information. Now, XDTE last week, well, wasn't such a good week for them. You can see that they had 3 days that they went through their calls. $600,000 in lost profits. And somebody's asked me how to do the math. And it's just like, I just keep on telling myself, really, I do this every single week. And I've been corrected on my math. I know people are checking it, so I know the math is correct. But you're looking at how far it went past, and then you back it into how much they had to cover when they close it. And I was showing the percentage it went through, but that was really kind of double dipping. And it wasn't double dipping, it was one or the other, depending on how you personally looked at it. But hey, at the end of the day, next week, 21.09 cents is approximately what they're going to pay you for next week. QDTE, well, they had a really bad day on Tuesday. Yeah, that's a really bad day. But they still made $150,000, but they're going to pay you that 4.6 million and 21 cents. RDTE, hell, I'm going to just say RDTE, nothing went through their strikes, and they made every single penny of their 26 cents. Now, the Russell may have gone down in that time period, but that's besides the point. It has. Now, another thing that I have recognized is XDTE. They still have not written any calls for 2026. They're still putting them into 2025. And you can quickly look back at XDTE and see that they have 11 more strikes than they did in the past. Where's those poor man cover calls? Not in 2026. Just throwing it out for general conversations to make you wonder what happened to those poor man cover calls for 2026. But anyway, May 30th, next Friday, they're going to pay XDTE 21 cents, QDTE 21, 22 cents, and RDTE is going to be 26.5, right around that. Now let's get into Yieldmax. Yieldmax came out and said, hey, they're going to start doing possibly some swaps, and they're going to do deep in the money calls, blah, 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 blah. And I watched a video, and they said, oh, this is going to fix the NAV, and it's going to do this, and it's going to do that. And I'm just sitting there going, oh, okay. I decide because they're just giving bad information. They are. So let's talk about, if I was a salesman, I'd be coming out and telling you this is fixing the world and doing everything too, because that's what salespeople do. But that's what they should be telling you. What they should be telling you is, hey, look, on IBIT, we can only hold 25,000 calls on either side. On selling calls or selling puts or buying calls or buying puts, they can only have 25,000 on either side. Now, on MSTR, they can only have 250,000 on either side. On IBIT, they were already at 21,000 calls. On MSTR, on their short, they were 174,000 calls on their shorts. So they had to go to do something else, or they wouldn't have been able to write. So for IBIT, they already started putting synthetics on the index for Bitcoin because they could not hold any more contracts. There you have it. Plain and simple. Don't think that this is going to solve any kind of NAV erosion or anything else. If it goes through the strike, it goes through the strike. And that's all there is to it. We're just going to go ahead and move on from Yieldmax because there's nothing wrong with what they're doing. They're just playing by the rules that they have to play by. Neos came out with their distributions. SPY 50 cents, QQQI 63, IWMI 55. You do not need me to read them all to you, but you can see what they're going to pay. And BTCI is $1.51. I love that BTCI. Now, I received a comment, and we're going to address this. This was back on my 500K covered calls. And basically, this guy's telling me, hey, you're down 15% on your distributions, and you're going to run out of money. And basically, this is quickly spiraling towards unrecoverable damage. Yes, I can't believe somebody's this ignorant about telling me about my portfolio, and 8% on cost is going to become 4% on cost. Oh my gosh. All right, let's unpack this. So, what he's talking about is QQQI from February to April is down 14% on their distributions. That is a very true statement. But, Mr., I'm going to be so critical of Brad and his portfolio, he's not going to make a comment when it's now plus 4%. And I was able to reinvest during that time period. So my revenue is going to go up. And he won't be able to make stupid comments. Yes, stupid. Sorry, stupid comment. Now, I'm going to address something else. Because he did make some other comments in there. One, it's 130% of your current needs. So when the market does take a drop, and by the way, just want to clarify this. Anybody that says 50% drop or 60% drop or any other percentage of drop, there has never been one single year in 150 years of the S&P where it has dropped 50% in 1 year. I can see the fat little fingers Googling that to find out that is true. There you have it. Now, there has been multiple years that it has gone down, like the Great Depression. But if you take that 50% and you ask any AI or anything else, can the market go down 50% in 1 year? It's going to tell you it's going to have to be something greater than the Great Depression. So, quantitative easing no longer exists. We're no longer on the gold system. We're going back to the gold system. Really. Nuclear war, going back to the gold system, and quantitative easing is no longer a factor for the Fed, and they can no longer quantitative ease. That is what this gentleman is actually trying to tell you. I am telling you, we're not going back to the gold standard. Quantitative easing is a thing, and there has not been more than a 38% drop, I think, 34% drop, since quantitative easing has been a variable to the Fed. Amazing how the drops have squashed. And It was because of that big drop that quantitative easing came about. So anybody that thinks that 40, 50, 60, 70, 80% drops in the S&P 500 is going to occur is absolutely, I'm not going to even say it. It doesn't even make sense anymore for people to even think about that. It doesn't. So stop fear mongering. Now, another one was he also said original cost. It's 8% on total cost. So what's the difference, Brad? I have $100,000 as my original cost. And every month I take a small portion above my 8% on cost and I reinvest it, making my cost basis go up every single month. What this gentleman is referring to is $100,000 and my cost basis never goes up ever in 15 years. But that, ladies and gentlemen, is not how you figure out what your actual cost is on your shares. And one thing I've never said, and this came up on a Facebook conversation, I use 8% on cost and not 8% on worth. Because if I used 8% on worth, I would overspend. I never said that, but it's true. If you ride it up and you start taking 8% on worth and the stock price goes up on a bull run for multiple years, you're going to find out that you're overspending because you should be using 8% on cost, not 8% on worth. Big difference during a bull run. And I'm expecting a pullback. And by the way, just for you critics out there, QQQI is above my cost basis. So what is this guy even talking about? Spiraling out of control. Just thought I'd throw it out for general conversation. It's not out of control. My distributions are going up. You're under the impression that distributions, I don't even know what the impression is. I can't even discuss it because when the stock price goes down on QQQI, so does the distributions. And when the price comes back up, distributions go back up. So that's the function. So anyway, have some coffee, take a chill pill. Don't worry about Brad's portfolio. Worry about your own portfolio and what you should have in it. So until next time, God bless.